following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, good news, bad news. The good news is I will be on today, right now. The bad news is you're going to have me again. Wednesday, Thursday, and Friday, I'm going to be taking Basil Chapman's place. If you think that's not hard to do, I can imagine how Jay Leno felt when he tried to replace Johnny Carson many, many years ago. But we'll be doing a show. I'm going to do it a little bit differently on Wednesday, Thursday, and Friday. We're going to talk a little bit about the markets, but a lot of it is going to be some historical stuff, some things related to education and, hopefully helpful things. The other one is tomorrow. It's going to be a special show at this time. I'll have Stan Harley of the Harley Stock Market Cycles on, and I think you'll enjoy that very much. He's really, he's been around for a very, very long time, and I think you'll enjoy it. We've had him on before, and he's done a great job, so we'll be watching him also. We'll start out today like we usually do with the DAX index. As you can see, the DAX also went up and expanded to a new high. Again, we're looking at those same Fibonacci expansion numbers that we like to see, 1.27 and 1.618. And as you can see on the downside here, we're coming down into pretty good support, much like we're seeing in the S&P and some of the other indices that we're looking at. But we'll walk through these a little later this morning, one by one, as they pop up, with the questions. I'll cover some of the questions a little bit later, but I wanted to go through something this week. If you remember, we had Norm Winsky on last week telling us how the importance of that March 20th spring equinox was going to be. That was spot on. It was within, I think, about an hour of the time when the market made its high, and that's pretty good. So then we had Bill Koval on. Yesterday, he was also saying that we were probably getting ready for a pretty substantial drop, which in fact we've also seen. And then also about a week ago, if you'll remember, we had, well, it was a little more than a week ago, we had Shane Smolian on with his Fed juice indicator, and that has been, very good. And he's been following this for quite a while, and by golly, you can't fade that very much. So we'll see. But we're at some real critical points here in the market. We'll just take a look here, what we were watching. I'll just put this up here so we can take a quick look at it. This is what we were looking at coming into this week with the S&P. This is what I put into the newsletter on over the weekend. But as you can see, we had that one-day rally. Everybody that bought this stuff, any of the stocks from March 1st on is underwater now, and a lot of them are underwater big time, especially in the banking sector. That's a really, really bad one that's been hit, extremely hard. But let's take a look at what's happened now. As you can see, we did have the big sell-off, and I related this to these gaps that we've seen in the Dow Jones, because I'm a firm believer that we're not going to see these gaps over a long period of time. They're going to be filled, and that's the main thing that I was looking at. And if we take a look at the Dow Jones here, just on the weekly chart here, and this is the one that I did over the weekend. I haven't updated it yet because I think it's best to see what we're looking at just in case things change a little bit. But you'll notice that this second gap that we had here, actually was the first big gap, was at 20,650. We filled that yesterday, folks, in just one day. The next gap down here that we're looking at is at right around 20,000. That's a much larger drop Whether what happens from here to there, I'm not sure, but I believe these gaps are going to be filled, and there's a few others. There's another one down there at around 19,000, but those are the ones that I'm looking at, and that's just the way that we look at the technical analysis. It's nothing more, nothing less, just looking to see what's happened in the past. And if you look at enough charts, you'll be amazed, as I am, that gee, they really follow these patterns quite nicely. Unfortunately, not all the time, but they do it quite nicely. Let's take a quick look here at Goldman Sachs as we were coming into this week. We'll just put this up here. This was as of Sunday night. This is a 4-hour chart. It basically shows that 1, 2, 3, 4, 5 broadening top or expanding triangle known as the reverse point wave. We're all the way down. We hit the 230 level, 232 level in Goldman Sachs yesterday, and that breaks a great deal of support over a long period of time. To get, if Goldman Sachs should get below the 215 level, that would be lower than I believe that's it. I have to double check. I thought it was lower than the Trump election, but I'm not absolutely sure of that. So we'll keep an eye on that. Well, if we take a quick look here at the Nasdaq, I just wanted to give you an idea on trading this Nasdaq, which is a pretty wild. Oh, just a second here. The old cowboy hit the wrong button here. Give me a second. We'll put the old. Hold on. 1, 2, 3. This should do it. Hold on. Here we go. Okay, this is a Nasdaq on an hourly chart, and if you'll notice, that 1.618 number up there at the 54.38 level, we hit that twice. We took out the previous day's high yesterday morning just on a very, very fast tick, and then you can see that we had the big break to the downside. But that's in past tense. What I wanted to do is to show you what actually happened here in the Nasdaq, because people say, once these things happen, that there's no trading opportunities. Well, if you pay attention to it intraday, you'll notice that even though the Nasdaq dropped well over 120 points in one day, there were two really good rallies. I mean, these rallies were 15 points. They were both relatively predictable, as you can see. One happened at around noon, the other one happened around 2 o'clock. And now, if this is really bearish, we'll repeat this same type of rally, and the Nasdaq will rally up today to around the 53.40 level. That's when you're looking at these markets intraday and you see these big moves, you'll see this repetition, but frankly, sometimes it's pretty hairy, and you can't stand in front of it. That makes it a little bit more difficult. We've had a request to take a look at the chart of 3M. It's been the one that has been really one of the strongest Dow stocks, going all the way back to 2009. And we'll put this up to let you folks take a look at it. This is a chart from our good friend Jim Bartolioni from, take a little break here, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we were talking about 3M, Minnesota Mining and Manufacturing, the makers of Scotch tape, and also the stick-it notes that we have all the time. That happened to be a big mistake, and they turned it into a multi-million-dollar product. But this is one of the most well-run companies in the world, folks. But you'll see here that on these ratios and patterns that we have going back well over 35 years, that we could be at something very significant here in 3M at this spot. We have others that look like this also, but this one happens to be one that Jim worked up, and it looks really interesting up in these levels of where we are now, much like we see in other things too. But I think it's worthy of keeping it on the watch list because this has been one of the leaders. It's also a high price stock, and with the Dow being price weighted, that makes it very, very interesting to keep an eye on that. So that's one of the things. We have to switch our gears here right now because we have something happening that is affecting one of the things that we've been looking at for some time, and that's the U.S. dollar. What we're watching here is this Japanese yen. And please tell me I have this Japanese yen. I put this thing in. I've been waiting for this all morning. Shut the front door and raise the rent. Here we are. Just a second. Just get it up here. I want to get it here so we can take a look at it. This is where we were yesterday, and we want to take a look at it because we are now, give me 1 second, and here we go. We are now taking out the lows at 111.60. We took those out last night, and we're making new lows right now. We're trading around 111.20. This sets up this potential ABCD pattern all the way down to the 107, folks. That's 4 handles in the dollar yen, and that means the U.S. dollar is most probably going to weaken here. And whether that affects any other thing, I'm not sure. But we are breaking down, and this is so important because if you'll notice those little red, that little red ABCD pattern that stopped at the 55% level, didn't make 61% retracement. It made the perfect ABCD, but it did not make 61. So you'll see it stayed there for 3 days and then had the big down day last week, and now we're continuing down, and we're taking out. We're almost ready to take out the 111 area. We're trading at 111.10 right now, so it's just a matter of seeing how far this thing is going to go down. But it looks very, very, very ominous. Now, the other thing that could happen here is that we've been down for so many days in a row here that we could be, maybe get some type of a bounce. But we've broken major support in the dollar yen, folks. That's what it looks like from a technical basis. And, you don't have to be a rocket scientist to realize you don't have to catch a falling knife. Let it stick in the ground and then pick it up. But this is one that is really rocking and rolling this morning. So you want to sort of, stay out of its way if you can, unless you want to be on the short side, which you should be. And we'll see, how it works. But right now, it is certainly, breaking down, from this area. Now, I've had a request to talk a little bit here about the E-mini S&P, and I'll put this up to take a look at it. And this is where we are. Well, it's pretty much up to date. We had our low last night, came in around 23.32. We've rallied up to, I think, I don't know, the last price I saw was around 23.40, so it was not much of a bounce so far. But we had that big move down. That was at a 50% retracement of the January 31st low. Held relatively well. We did pretty much the same thing in the NASDAQ. But the problem is this big thrust down, and it's coming, right at that time of a potential cycle high at that equinox of, March the 20th. And so I think you have to give it a little bit more, power to that. And also, the thing that Shane's been working on with the Fed juice, they've actually they're not juicing the market. So that could be the reason why we're seeing a little bit more weakness here. I don't know for sure, but it's certainly been acting that way. Anyway, that's what we're looking at here in the S&P. For rallies, if you go back and look to see that the last rally that we had a 14-point rally. We went from, 260. No, it was a 10-point rally. We went from a 268. Let's try this again. 2368 to 2379, and the harmonic number in the E-mini S&P is 5.5. 2 times that is 11. That was exactly spot on. So we'll keep an eye on that to see if it's going to act accordingly. But we should get a 10-point rally. Anything more than that, you'll be looking at a little bit higher prices. Possibly, maybe it could rally 15 points. But we broke so badly that it really is. Looks pretty difficult. Now let's get back to the U.S. dollar index here, because we were just talking about the yen. We'll move to the euro in just a little bit. But as you can see here, we've had this 61% retracement at the end of February. We've started to roll over, and as you can see, 2 days ago we went busting through the 78% level. That's when the euro took out the 107 level. And now it looks like we're going to have an ABCD structure coming in at around 98. That's down about another 1.5 in the dollar index, which would be equivalent to about another 2 points in the euro. That would take it up to the area of pretty close to 110. That would be, what we would be watching. I would think right now we're trading at 108. Still has a lot of strength. All of the little pullbacks have been, relatively minor. So it's telling you that you're watching something that has still more power to go. But the price objective on that would be the 110 level in the euro. That's what we would be watching at that particular time. Right now, we're trading. We got as high as on the S&P. We got as high as 23.42. We're trading at 23.38. But with this wide range down coming at the time of that equinox, it tells us that we're most probably getting ready to see a pretty big move down. It's been 1%, but it could go a whole lot lower than that because it's been pretty much straight up. Remember, people will buy this all the way down, folks. This is one of the things that Bernard Baruch in his book, his autobiography, My Own Story, was he said the greatest scam in the stock market is to inflate something to a high price, and people will buy it all the way down. And we've seen many instances of that during the dot-com bubble, and we're seeing it right now in Twitter. Twitter was at 23 just a few months ago, and now it's trading at 14 with all kinds of hype of being taken over and everything. All that was just hype. And then look at it now. It's 20, it's trading at 14. We've seen the same thing in Deutsche Bank. So we'll see how this works. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a quick look here at the XAU related to the gold market. As you can see, we've had a pretty good rally. And yesterday, with the Dow down 250 points, we had 240 points. You had a, the gold and silver stocks were up. And of course, right now, gold is up marginally. Silver is still down. Silver is acting very weak, folks. The gold has rallied to the 78% level from the high we made at 1265. And so that could be some type of resistance, but frankly, I don't know how much it's going to be. But silver can move very, very quickly, very fast. Right now, it's only rallied to the 50% level, but that's only part of it. If we take a look at platinum, which is a much, it's really a lot more thinly traded than any other. But the problem we have is that platinum was only able to rally to the 38% level over the past several weeks. That could be, indicative that maybe these metals are going to have a little bit of a back off here. We're starting to see a lot of selling in some commodities. Soybeans have been under some pressure. Wheat has been under pressure. Sugar has been under extreme pressure. Copper has been under pressure. So all of these could be leading that we could be looking at some interesting things going on in the commodity markets. Now, interest rates that go higher usually are associated with high inflation. And if that's the case, then maybe these will be turning, these commodities will be turning soon. And with the spring equinox right upon us, this might be a time to start looking at it. We have that big crop report on March 31st for the beans, which will be the planting intentions. So we'll need to pay really close attention to that. It's a very, very interesting one. Now, the next chart that I wanted to share with you folks comes from the seminar that we gave to our friends over in Hong Kong. If you'll take a little bit, I'll cover oil in just a second, Danny. It looks like it's breaking down pretty good, but I'll be right with you. So hold on, my friend. I imagine you're out in Peachtree Boulevard today looking at all the cherry blossoms. Okay, this is we gave this seminar back on the first week of March in Hong Kong. We have a lot of friends there, and it's really a lot of fun to go, to do it. But one of the things we try to do is we try to try not to guarantee them, but say, look, if you'll do some of these trades that we're going to be doing during the seminar and the following week, you're going to make more than you're going to be spending for the seminar. And this one turned out to be a really big winner because what we were looking for, I basically keep it as simple as possible. I look at the ABCD structures coming into the time frame that we're looking at. I try to find a ratio that fits nicely with it. And as you can see, this was a really nice 61% retracement coming off the low in February. It also happened to be a 382 coming off of the low in December, which was a big three drive to a bottom pattern. And of course, we went up right to that 25,000 level. And then yesterday, we left a big island reversal on the downside. It was down 1.5% in the Hang Seng, so they hit it pretty hard to the tune of about 400 points. So that tells us that this most probably this ABCD structure is finished, and now we should have a pretty good correction in the Hang Seng, much like we're looking at in some of the other things that we're keeping an eye on. Okay, we'll take a quick look here at the crude oil for our good friend Danny, and we'll pull this up. This is going to be May crude, the one that I watch. And as you can see here, we had a low down here at 47.25. We're almost there again. Some of the options have already gone below that, some of the contracts, but there is a 61% retracement there at $47 a barrel. Whether that's going to hold or not, certainly remains to be seen. So, it's better to be safe than sorry. So if you're trying to pick a bottom, make sure that you protect yourself, because you can see once these things start down, they come down very rapidly. And the high we made last week when we got up to 49.5 was nothing more than a 382 retracement of the previous high that we made in early February. That's another, big danger sign that we're seeing, as we watch these things going. Let me check to see, what the market is doing here, folks, because I want to tell it's acting pretty good. I mean, the way they talk in the den, that this is falling apart, and it's actually holding up relatively well. Okay, let's take a quick look here at a couple things that we want to be watching too. This is since we were talking about the commodities, I wanted to bring this DBA. I don't like ETFs, and I'm not going to be trading this. I just want to bring it up for just educational purposes for those of you that do like ETFs. This is basically an ETF. It has cattle, corn, soybeans, sugar, a few things like that into it, a mishmash of everything, but it's pretty heavily traded. As you can see, into December, you had that beautiful 3 drive to a bottom pattern. And so now we had a pretty good rally, and now we've had a head and shoulders bottom form. As you can see, the left shoulder was October through December, was a 1.27 expansion, and the December to March was a 78% retracement, and they're both at nearly the same levels, which makes it a perfectly symmetrical pattern. So we want to see what's going to happen here over the next few days, because this has a potential to be a pretty bullish pattern here. And so what we're doing is we're watching corn, wheat, soybeans, and along with crude oil is also this is not in the ETF or the DBA, but we'll be watching crude oil and some of the other things, because if interest rates are going to go higher, we could be looking at inflation, and that's what will make these things going. Folks, when I was at Drexel, we had inflation was running at about 13%. The interest rate on a house, as Tom told us yesterday on his house in Boston back in the 70s, was around 14%. You had AAA rated municipal bonds in California were yielding 18%, and those were tax-free. And that's like a 36% return. The problem is in 2 years they were called away. So you only had that for 2 years, and then the bonds were called because they were paying too much interest. They were callable bonds, so that was their really reasoning for it. Okay, let's get back to the U.S. dollar index. I know I'm jumping around here a little bit, but there's a lot of things to cover this morning, and I think it's important that we get some of these things done. The second part of the hour, when I'm back on at 11 o'clock, we'll cover, some of the psychological things and some of the stories that I have about the really good trades or really bad trades that I've had, and some of the people that I've met, which either is good or bad, who knows. All right, well, it's good. Most of I still have a lot of memories. Okay, let's move this over here. What I was looking for in the euro coming into this week was to see if we could get a little bit of a pullback to, see the rally. Oops, we got to take a little break here. 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, so I'm going to share with you one of the stories. I had to go back to New York about once a year when I was at Drexel, and I was flying back, and sitting in the next seat to me in the next aisle was the actor Robert Vaughn. He's the man who played Napoleon Solo, and he was in the Magnificent Seven. Very famous actor, but gee, he really was. He really had a huge ego. But anyway, he was sitting there, and the sky goddess came up, and she was helping somebody else, and he said, Miss, and she said, yes, and she says, do you know who I am? And the girl said, please don't tell me, she says, because we have a pool going on in the galley. And I almost fainted. And anyway, he was very upset that he didn't know him. But when I had a chance, I went up to talk to her, and I said, wow, I said, that had to be the greatest comeback. And she said, you think that he's, what was the word she said? She said, you think that buckaroo thinks this is my first rodeo? Anyway, it was really rather funny, to see that. But he really, he wasn't a Drexel account or anything, but that was the only contact that I ever had with him before. He was really rude, but sometimes that happens. But anyway, I thought that was really funny. Whether it was here or not, I don't know. I have some other stories. I hope you'll like those a little bit later, but we'll go through that one at a time. All righty, let's move on to the next thing that we want to talk about, and that is the old bondolis. We need to talk about the bondolis because we're coming up to some very interesting spot in the bandolis. Hold on a second here. We'll get the bonds up. We'll take a look at them here. Okay, we made that 1.27 expansion, also a 1.618 expansion. We felt that the market was going to rally even if the Fed raised rates because it had been discounted, into the next century. But if you'll notice the key figure here at the 61% retrace level at 150.30, we hit a high of 150. 23 and change, I believe, last night. So that could be a very interesting one to watch. So keep an eye on that one. It's very, 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 very important, I believe. The fact is we've come out here very, very strong. We're up about 7 days in a row now. So it's due for a pullback. And then that pullback, we really need to watch that because that's going to tell us, what the next move is going to be. Folks, you got to remember that the Federal Reserve does not set interest rates. Interest rates are set by the market. That was told to us by both Ben Bernanke and Alan Greenspan. And if you look at history, that's pretty much the way that it looks like. So, watch that, quite carefully. As relating to the stock market, folks, remember that the shorts are absolutely scared to death. Even with this big drop yesterday, any type of rally, they're going to remember what happened before, because this is nothing more than a 2% drop from the high, and so expect a rally, and that's what you have to do. Is you Yeah, well, I don't get scared to death, but if you use a stop, you don't have to be scared to do that. So just remember that that's what you have to do, because if you don't use a stop, what you're doing is you're telling the market, say, I'm smarter than you, so I know where it's going to go, and nobody's that smart, so except God, and she doesn't trade. So just remember to use a stop. Let's take a quick look. We must be having we're not having a rally at all. It's doing nothing. It's at 2340. We've only bounced 7 or 8 points off the bottom, and that's not much as of yet. So we'll keep an eye on this to see what it's doing. We're only 6 points away in the bonds at that 150.30 level. So really keep an eye on that. That's going to be a real interesting one. And the other one that I think, thank you, Z, for putting this in. He puts in the 4 trading fears that Mark Douglas always talked about: the fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. And believe me, they have lots of cousins and uncles along those fears that come into the situation too. So, it's trading is all mental, folks. Honest to God, it's that 9-inch cycle between your left ear and your right ear. Once you get that one, take it, you'll see, how that works. And that's basically, how it operates, but who knows? Okay, let's see here what's going on here. All right. Let's see. It's going to be a year pretty soon. It'd be 2 years. It's going to be 2 years in September, on September the 10th, that we lost Mark. He was one of my best friends. He wrote that book, Trading in the Zone, here in my office, and he interviewed a whole bunch of traders. I've got a trader coming out next week from Chicago, an old friend that's going to be spending 3 days with us and we're reminiscing stories. But he was interviewed by Mark several times, and we're going to have a lot of fun. And he's a big golfer, so he's looking forward to play golfing. With the weather in Tucson now, it's just absolutely perfect. It's about 85 and sunny all day long here. So let's move on to the next thing that we want to cover here, which is, let's get the next thing. I covered the Hang Seng. I covered the DBA. I did that. Let's double check, make sure I haven't missed anything. This is the one I wanted to show you here. This is it. This is the silver market. I just wanted to show you here that on the silver, it's acting much weaker than the gold. You'll notice that we had that ABCD structure that topped up there at the 1850 level. Well, we're still $1 a barrel, $1 an ounce under that level. So keep in mind that this could be something that's going to be really interesting, because silver can pop anytime because it's really thin, folks. It's 1/6, the volatility of, or 1/6 the liquidity of the gold market. So it doesn't take much to move that silver market. So that's it. The whole key to this, from what I can understand, from what I've gathered here, the whole key that I see in this is that whether they're going to inflate and try to get these commodity prices up. Well, if you get commodity prices up, you have to get wages up. And so that's, that's it. No, they didn't come in barrels, Danny. Silver coins, they come in bags. 55-pound bag was 1,000 ounces, and that was 760 ounces of pure silver, as I recall. And all the ones that I had were at face value. I never had any that weren't at face value, so I was buying that stuff when it was, back in the 60s. And I carted it around across the country a few times, but paid for a couple of college educations, which was good. Oh boy, yeah. If you've got a bag of Morgan silver dollars, you've got something, really special. I happen to be involved with the oh my gosh, I can't remember, with Steve Markoff and the Laverne Redfield collection. Way back in the 70s, they bought that fantastic collection out of Carson City, out of his old mansion, and I was up there picking up the coins, and boy, they had some of the most unusual stuff you've ever seen. A full bag, I believe, of 1925 silver dollars. These were, I think they were $10,000 each coin, and there were 1,000 of them in there. So it was a huge collection. And anyway, that's it. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the Dow down about 50 points. The S&P's down 4, and the Nasdaq is actually up a little bit, which is not to be unexpected because it was down the most. And we've got silver up. Silver is down 5 cents, and we've got the gold up about $1.20. Keep an eye on these bonds, folks. They're going to be real interesting at this 150.30 level. I think we've hit 150.29 so far. My beeper went off at 150.29 and then it stopped. So my guess is that I don't think it's going any higher than that. But watch that very, very closely, because that's a 61% retracement of that move down from the last big drop before we went into the Fed meeting. So if the market's really bearish, it's not going to go much above that, would be my guess. By the way, I will be back on the air in an hour, taking Basil Chapman's spot Wednesday, Thursday, and Friday. I'm going to try to do a little bit different. I will do a little bit different show on 11, 12, between 11 and 12 Wednesday, Thursday, and Friday. I will bring in some psychology and some stories. But tomorrow we have Stan Harley on from Harley Stock Market Cycle. So try not to miss that, folks. He's darn good, and I think you'll enjoy it very much. But we'll have him on, and it maybe even Norm Winsky will pop in as a potential surprise guest. I've tried to talk to him about that, but he hasn't got back to me yet. Hopefully he will, because he always has some really good information on the markets, which is what we're looking for here at TFNN. We have some really good things that are jumping around here in these markets, and we'll watch how things are going. Okay, right now we're seeing a little bit of weakness in the grains, but we're going to cover that a little bit later. Maybe at the 11 o'clock show, I will talk a little bit more about the grains, because I think we're getting ready for a really good bottom in some of these grain markets, which might lead to some of the inflation that people are possibly expecting. So that's neither here nor there, but we'll keep a very, very close eye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.